Hi, today I'm going to talk to you about money management, and more specifically money management within the account that I've set up for the thread on Forex Factory. One thing I learned a while ago off Cobra from the THV thread is that demo accounts really aren't the best way to practice Forex. Now let me just clarify that. Yes, demo accounts are great for learning how to get around your platform and understanding how to place trades, exit trades, play around with a strategy, just get a good understanding of how Forex works and how your trading platform works. But what the demo account will not do very well for you is allow you to feel the psychological aspects of trading. You really only start experiencing the psychological aspects of trading. In other words, getting pain when you make a loss, when it's your own money. And unfortunately with Forex, this is a big battle for traders. As you go further and further into Forex, the trade amounts become larger and larger and the psychological aspects become worse and worse. And unless you can mentally get that sorted fairly early on, you're going to run into trouble and lose money in the market. So our recommendation is to, yes, use a demo account, learn how to get just your trading platform operational and how to place trades and so on. Understand your strategy you're going to trade, and then understand money management principles very quickly and open yourself a live account. How much should you fund this live account with when you're practicing? Well, don't go and fund it with all the trading capital you're going to invest for your future. You're likely to blow it and you're going to experience huge pain. The best thing to do would be to take an amount that you feel comfortable with, that if you lost it, it's not going to be a huge impact on your life, but it has to be large enough so that you feel a bit of pain if you blew the account. For some people, if you're a multimillionaire, you know, an account of $100 is not going to give you that pain, so you'd be using a larger account. What I've done here on the thread is I've opened a $100 live trading account because I think that should be achievable by just about everyone that wants to investigate getting into Forex. And it's a way of getting in, feeling just a little bit of pain because you're losing your own money, and it just means that anyone can have a go. $100 in the account, USD. And if you blow it, well, heck, you've lost $100. You'll be a little bit unhappy about losing the $100, but at least you didn't lose everything you've earned since you started your working career. Okay, enough said on that. So those are the reasons why I funded this live account with $100, just so that you guys, the newer guys, can follow on with a small account as well. Right, once we've done this, we've got to understand goals. What are our goals? Are we just going to go and box on ahead and just trade and then hope we're profitable? No, we can't do that. We've got to have goals. So I'm writing a post here on the forum, and I thought that what we'll do is we'll discuss the money management. I'll write in what we discuss here into here so that everyone can see it. So the starting equity is $100. Our goal is a goal that Cobra put to me, which is to consider yourself to have kind of got some kind of coherence with trading. This doesn't mean you're a guru or anything, just means that you're kind of getting it under control. The idea is to increase, in a 6-month period, we want to increase our account by 10% per month with an absolute maximum drawdown of 20%. Okay, if we don't do that consistently for 6 months, we can't call ourselves traders, so to speak. This month our goal will be, because we're starting with $100, our goal is to increase our equity by $10, but the equity must not get below $80. If we think about a trading month, there's 30 days. They're not all trading days because we've got weekends. So if we take into account the weekends, we're probably left with 4 weeks, 5 days per week. There's 20 days plus another couple of days because there's 30 days in the month on average. Let's say that we're going to have 17 trading days that we're going to concentrate on earning our $10 from. So we've got to be profitable $10 per day for 17 out of all those trading days. If we trade some of the other days, fine, we make a little bit more money, but also it gives us the opportunity to take some days off. Also allows us to make up for any losses on previous days on an extra day if we so wish. Okay, so that's what we've written here, 17 trading days in the month, what we're going to use. We're going to require an average profit per day, because we want $10 out of the whole month. Out of the 17 days, we're going to have to get approximately 60 cents per day. Okay, it actually works out about 58 point something cents, but I've rounded that up to 60 cents just to help us use round numbers. So 60 cents per day is what we're going to aim for to increase this account by 10% over the month. What is going to be our realistic target of pips per day that we're going to take as profit? Well, I aim for about 40 pips a day, but for this little bit of a challenge for you guys, I'm going to say, look, as new guys, we should probably be realistic and say, let's aim for 20 pips a day. We should be able to achieve that. This means that each pip, we need to know the value of each pip. So if we're going to earn 60 cents per day from 20 pips profit, then we've got to divide the 20 into the 60 cents, and we've worked out that each pip is going to be worth 3 cents per pip. That being said, that means that for a pound USD or euro USD or anything that's got USD on the bottom here as the base currency, we're going to have to use a $300 lot size, which is for a standard lot size of $100,000 would mean it's a 0.003 of a lot. So that would allow us to trade $300. So that means that by trading a $300 lot size, or 0.003 lots, if you've got a mini account or micro account or whatever, you might have to change this figure. Get this right. In the end, what you're trying to do is trade a $300 lot size to achieve 3 cents per pip. Now on the video here, I'm going to show you on Oanda how easy it is to determine your pip size. So if I go to Euro USD and I say I'm going to buy, if I put 300 in here, down here it tells me how much one pip is going to be worth. It's 0.03 per USD per pip. So it's very easy. If I change, so I haven't got USD on the bottom, and I choose something like the pound yen, then I've got, if I go and do a buy on that and I look for 300 there, one pip is still going to be worth 300 USD, but if I increase the amount, you'll see that that's quite disproportionate. So if I go say 1,000 or 10,000 or $100,000, we see that each pip is actually worth $11 USD. So normally for a pair that's got USD on the bottom, it would be $10 per pip, but because we've got a yen on the bottom, it's an extra dollar per pip. So when we're trading 300 as our $300 size, 300 units of this, it's still pretty well damn close to this. There's going to be a 10% difference, so maybe you might want to do something like 250 when you're on the yen, and it's still, you know, because of the resolution of this, is still showing 3 cents. If we took that down to 200, you'll see that it'll change to 2 cents. So just a point to note is that when you change your currency, the units that you're trading will affect the value of the pip. I might even just consider just going 300 all round, because there's only a 10% difference. I'm not too worried. Okay, just that was a quick aside. So that's what we determine. $300 lot size will work for just about everything. If we're using the yen pairs, it's going to be a 10% extra amount that's going to be what the pip is worth. So that'll be, it's worth, instead of 3 cents, it'll be 3.3 cents. We're not too worried. Okay, what's the maximum trade size we're going to ever do? How much are we going to risk of our equity maximum per trade? Well, I would consider 2% to be a realistic amount. Typically I would probably want to be trading about 1% to 1.5% of my equity per trade, but if you did a maximum ever of 2%, if we said that would be $2 out of our $100 at 3 cents per pip, the maximum stop loss would be 2 divided by the 3 cents, $2 divided by the 3 cents, which is 66 pips. That's quite realistic. So if we were only doing a 1% trade size, which would be fantastic. It's allowing us to have a 33 pip stop loss, and we're happy with that. Okay, I hope you've learned enough. That's what we need for our challenge here, using money management on our $100 account. That's Stratman from pipware.com signing off. Cheers.